Welcome back to the Brent Bruce Daily. Today is Tuesday, the 15th of November, 2022. It is now 2:26 p.m. Central Time, and we now have the report that came in today, the wholesale measure of inflation, the producer price index. We're going to talk about where that came in, how the market is responding. But before I do that, I want to let you know about another video that I put out today on my YouTube channel that talks about what is points. So if you are a real estate agent or someone in the real estate industry, this is something that you can take a look at. And if you like that content, you can repost it and use it for content on your page to educate your customers, buyers, borrowers, anything like that. So take a look at that on the YouTube page and make sure that you please like and subscribe there. So wholesale inflation numbers came out today, and it came in with inflation slower than was anticipated. Okay, so let's jump over here to one of our pages. Now, this is Bloomberg. I wanted to give you a couple of different pages other than CNBC today. So Bloomberg is reporting that the index rose by 8% from October of 2021. Well, that's not good. We don't want to see inflation up 8% year over year, but it was only up 0.2 month over month, which is an improvement in month over month numbers, which means that it's starting to show, as I keep talking about, that number curving over, and it looks like inflation will be able to start convincingly subsiding, which is good for home loan interest rates. If you want to go to the horse's mouth, you can go to the U.S. Bureau of Labor Statistics, who puts this report out. And here we are, the PPI for final demand advanced 0.2 in October. So this is good news for home loan interest rates. How are the markets responding? The market was actually improving quite a bit more today, and we retracted a little bit here. That's why you have a lock alert from our friends over at MBS Highway. They're the ones who let us know if we need to, run to our computers and lock in interest rates ahead of a reprice, as we talk about many times, that banks will reprice intraday if they think that the market is running away from them in order to avoid losses. So here we are, up 22 basis points on our mortgage-backed security, which is good. We continue to have positive days. Home loan interest rates continue to go down, and I'm going to show you that in just a minute here. The 10-year Treasury is down 7. That's a good day on the 10-year Treasury. Now, some people will argue with me on that because they don't want to see Treasury yields go down. They want to see Treasury yields stay high because that is the return that they're going to get on Treasury yield investments. Well, the mortgage-backed security competes with the 10-year Treasury, so we want to see that yield come down. Now it's at 3.8. Now remember, we were talking about 4.2 just last week. So this is a dramatic improvement in our eyes to the 10-year Treasury as well. Let's take a look at the charts here on our mortgage-backed security. This was our huge day on Thursday. This was yesterday, Monday. We battled with this ceiling of resistance right here. Today, because of our producer price index report, we broke convincingly above this Fibonacci level. But as the dust settled, we have drifted back down, and essentially it looks like we may close right at this ceiling of resistance, which is now going to be something we're going to have to battle. Right now it is 2:29 p.m., as I mentioned earlier, so we still have an hour and a half left in the trading day for the bond market. So anything can happen. Hopefully we do end up closing above this Fibonacci level right here. But it is good because green is good. And look at this wonderful run that we've been having the last few days. All right. So that is good news. Let's take a look at where we are on our Brent Bruce daily interest rate. Where is it? Oh, here it is over here. All right. So let's look at our scenarios. Again, this is a very well qualified 30-year fixed conventional 800 FICO score, 25% down, single family residence, owner occupied borrower. Got it all into one breath there. We are at now 6.5%. with a convincing credit. Now, earlier today, I will tell you that this was 6.375. So we had 6.375 with no cost at one point earlier today. So there was an intraday reprice with United Wholesale and some of the other banks as well. So there was a moment when we were able to lock in that 6.375, probably right before that lock alert came out. So if we jumped in and locked at that very moment, we probably would have been able to give a 6.375% interest rate on the Brent Bruce Daily with no cost. So where are we if we want to get to that 6.375? It's going to cost $144. Okay, so essentially we are at 6.375% for a very well qualified client that is putting 25% down today because it's only costing $144 to get that rate. If they wanted to pay a point, I mean, look, we're all the way down at 5.99. We're back to 5.99 with one discount point. Okay. That is a tremendous improvement and benefit to what we have been seeing in the last few days. All right. So I don't have a whole lot of report coming of information coming out tomorrow. There's going to be some mortgage numbers as far as application rates and things like that. But in general, it might be a little bit slower for the rest of the week. I'm going to keep you posted and let you know what's going on. Please do like, subscribe, share, and comment. Let me know your thoughts. Let me know what you want me to teach on. Let me know what you want me to clarify. And I know that I still have requests for more information about the definition of a Fibonacci level and the moving averages, the 25, the 50, the 100-day moving averages that I know that I need to get out to you guys. Right now, do take a look at the video that I put out. It's about 18 minutes on what are discount points. So what are points? And that is directed towards the consumer, so you can use that content and pass it along on your social media channels. Thanks a lot. Let me know your thoughts. Have a great day.